Hi, people. Thank you for stopping by Building Wealth with Rajiv. Have you ever wondered how a Wall Street analyst thinks about companies or prices the stock? What are the inner workings of Wall Street? You should listen to this chat then. My chat with Henry, who spent a decade on Wall Street, he's just written a book as well, and he shares some of his secrets. I hope you enjoy the conversation. If you find it useful, share with your friends and follow my channel. Thank you.
It was like a long learning process, right? So just so one was how stocks work, right?
Yeah.
So how stocks move. And so the first thing, and I'm sure you probably picked up on it, is that stocks really reflect change in the future. And so then a lot of the learning in terms of research was thinking, how do you project change? How do you think about movements of change or what's going on in an industry, and then projecting that into a financial model. And the financial model itself is, there's a lot of ground up building from the accounting to get a sense of the future earnings of a business. But putting those two pieces together, doing the financial analysis, thinking about change and expectations, it's very abstract. But that was sort of like the big learning, I would say, in terms of like thinking about how stocks actually work.
Look, I've been talking to a lot of investors and about discounted cash flow, and these are successful investors. Like you must have seen on my channel. I mean, the amazing returns they have, and there's not a lot of faith in discounted cash flow models and all that stuff. Is that a what do you make out of it now since you're out of Wall Street?
Yeah. So it's not so much like discounted cash flow, like how it's taught in like business school. Like there's like a mechanical project cash flows and you get a valuation. It's more like, hey, let's project out earnings from, say like MSCI, like this business, what's it going to do to earnings? And then what is its multiple? But then the multiple is sort of, okay, what does MSCI look like in terms of a business? How do we comp it? Generates a lot of free cash flow. So when I was covering it, I thought, this should be covered, or this should be comped closer to like an S&P 500 stock rather than, peer groups in the information services group, which are like, these business services companies that we can talk about. So it's like using those techniques of thinking about forward earnings, but you're not really basing it on like what I think the value is. You're more thinking about what is going to change in the business. What's it going to look like in the future? I think like that's what good analysts should be doing, are doing.
Yeah, but it's not easy, right? I mean, thinking 10 years down the line, what could change in the business and
exactly.
So how do you manage that? You're talking to the management very closely, or
So talk with management. So I mean, part of the job is like you're talking with management all the time. I mean, you're tracking every quarter, tracking their quarterly earnings, and you're doing like a deep dive, usually once every quarter, looking at all the industry data just to look at trends. So you stay quite close to the story, but the hard part is like thinking to the future, right? Because sometimes management doesn't like management will tell you what they think the company will do for the next year. So earnings estimates will generally just reflect management's expectations for the next year. And that's honestly why things swing so much, because things change and there's new products being launched or something in the economy happens and that changes expectations. But the tricky part is figuring out one, like what's going to impact the business. That's just sort of like a basic understanding of the business. And the second part is, you kind of have to imagine what's happening in the future and putting that into numbers. If that makes sense.
Yeah, no, it is, but it's a bit of a guess game. But but yeah. I think anyway, I mean, no science is perfect. So I mean, look, what's the difference between buy side and sell side research?
Okay, yeah. So buy side are like the investment funds. So that's like the hedge fund managing money on behalf of someone who gave them a hedge fund, wealthy people or pensions or whatnot, or like a mutual fund. And so they're managing stocks. And then the sell side is, when I was there, we're the banks. We give them research. They give us, we give them ideas, we give them research, and then they trade with us.
Okay.
Kind
And
of how it works.
who is more objective? Is it sell side or buy side?
Uh, well, buy side has to get their price right.
Okay.
Sell side is a little bit more focused on the company, right? So sometimes when it's a hedge fund, sometimes they want, sometimes they look for where a sell side person is wrong,
Mm-hmm.
if that makes sense. So like the sell side when it's just research and thinking about like a long-term company, that's more aligned with like a long only, like a Fidelity. That's like
Mm-hmm.
buying a stock for at least 3 years. That's like their time horizon.
Okay.
Hedge funds are like, okay, what is the sell side thinking? How am I going to trade off sell side estimates? Are they going to come down because of something that went on in the company? Is the sell side missing something? That's what like hedge fund guys do.
So the hedge fund time horizon is very short, isn't it?
Yeah. Like 1 year.
And price targets, for example, if I'm a
Yeah.
retail investor, for example, and Henry, I have quite a few friends who have taken, let's say, subscription to tip ranks, and
Okay.
and they see the average analyst estimate is this. Uh, let's say for Snowflake, it's about
Mhm.
250, 260, and it's at
Yeah.
200 right now. And many of them they end up buying it because they see
Yeah.
the alpha of $60. But
Yeah.
how should people use it? Because comes 3 months down the line, something happens, the analyst kind of downgrade the price target to
Mhm.
200. And then you wonder why am I at it was six months ago, it was 260, you know. So what's the best way? What do you suggest? How to use this price target? How to take what spirit should you take them in?
Yeah. So it's yeah, it's kind of unfortunate because okay, so here's how I think about it, right? So assume that the sell side is selling their research to a hedge fund, and unfortunately, you're not like you won't be able to talk to them, so you're just going based off the report, which unfortunately doesn't usually have that much information. So assume that that price target is just a 1 year target. It's not like it's not supposed to be a long-term target. It's just their 1 year view, and it's based off their 1 year earnings estimate, unless they talk about something different in the report. It's based off like that 1 year earnings, and that 1 year earnings reflects what the company says they're going to do. So, um, so it's sort of like if nothing changes and the market just keeps doing what it's going to be doing, that's the target. That's kind of what it's really saying.
Okay.
Because does that make sense?
Yeah, no, it makes sense. Yeah.
Yeah. And so honestly, like, so then if you want to dig into it, there's basically two assumptions that will be in that target. That if you want to kind of just dig in, make sure this target is not just bogus. It's going to be either an earnings, it's going to be an earnings estimate.
Mm-hmm.
So like Snowflake is probably a great example because I think Snowflake has, from what I remember, like they have a ton of bookings, right? So the
Mm-hmm.
bookings, but we don't know if those bookings are going to come when they're going to come. But it seems like they have a huge market. So part of the earnings estimate, I'm assuming, I haven't looked at it that closely, is how much earnings are they going to get, over the next few years. So you look at the analyst estimate for that, and then the multiple. That's a big thing too, because a lot of these tech companies were like at very aggressive multiples. So is that multiple like, is it like how are they using that multiple? Usually they'll just be using a multiple of the group. So they'll be
Mm-hmm.
using an enterprise SaaS multiple. Um, and so one way to just check that, I think, is like it's kind of tricky because like the past 10 years multiples have just gone up, except until this year, right? So everyone just multiples just kept going up. But ideally, you would kind of want to make sure that multiple is reasonable,
Yeah.
right? Like maybe you would want to look at like Salesforce or something like that. Think about that multiple because it's kind of a mature company. Take like a forward earnings of Snowflake and then use that multiple. That could kind of give you maybe a conservative target over the long run.
It's
Does that
relative. That's
help?
what you're saying.
Yeah, usually these price targets are always relative. The multiples are always relative. So just that's why you want to be careful.
So you can't take
Um,
them blindly and accept them blindly and make
no,
bulk
you can't.
purchase.
You really can't. Yeah.
Okay. All right.
I mean, if they're like a thoughtful analyst, that's where like if you kind of know how the analyst thinks, then maybe. But
Hmm.
generally, Yeah, even when on the sell, even like on the sell side, institutional investors, people would ask about the target, but they'd be more curious how you get to the target.
Okay. And how did you identify compounders? I mean, you talked about in your book as well, right?
Hmm.
Huge compounders. What are the criteria you look for in identifying a great compounder?
Yeah. Um, so there's a list of things, but I'll start with like the business, right? So with MSCI, like what I noticed with that one is one, they have proprietary data.
Mm,
So they have some sort of service, and they have this service that's sort of embedded into their clients. Like investors have to use benchmarks. So that's
mm,
kind of like the first thing that I could look for. Is it embedded? Is there something proprietary? Um, that's sort of the kind of like, what does this business model look like? It's basically how recurring and how resilient it is.
mm-hmm.
Um, and then so that's sort of the business model itself. And then the second part, um, and this is sort of like, all right, you got to identify what's really valuable in the industry, and that can be kind of tricky. So with indexes, it was, I guess it was a little easy because once you study indexes, you realize like, okay, there's only a couple of indexes, and everyone just goes to the leading index. So that S&P, MSCI, even like Moody's for credit, that they have the leading indexes, so they're going to stay dominant. So that's kind of a factor too. It's like either you're looking for right, something proprietary they have, or like another sector that I was looking at, like waste companies. You look for what's like limited that no one else can replicate. Similar kind of concept, but in waste companies, it was landfills. Like no one could build a new landfill. So the ones who own landfills are the most valuable. And then the kind of final thing is, you know, you always want to think about the potential market, like how big can that market be. So that's why, kind of was long-winded with MSCI. I was really thinking about how big ESG could be, how big indexes could be. So with Snowflake, obviously it's like huge addressable market, I think. But that's, I think, one of the reasons why there's a lot of good investors behind them. It's because you want to look for companies that have an addressable market that's just really big, because
Yeah.
that's sort of, yeah. So, it's sort of like a very resilient company. It's got something unique, which is basically a competitive advantage. And then it has like a huge market. That's,
But how do you value, what's like the growth stocks and the value stocks, right? I mean, these are
mm,
some terms which are used and some people don't agree with those terms, but let's take a company like Snowflake, which is a growth stock, yeah,
yeah.
and they take a value stock, which is like Apple, right? For example,
Hmm.
where things are defined.
Hmm.
How do you kind of differentiate in terms of valuing those stocks? Is it what approach? How different is the approach?
Yeah. So the way I always did it, and I think the way this is how it actually is done, is it's sector by sector.
Okay.
So like as an example for this, so for the group of companies like MSCI, that is MSCI is in information services companies. There's like MSCI, there's S&P Global, there's like IHS Market, like all these data companies. The multiple is reflective of the fact that they're all data companies that are very like recurring, resilient companies.
Okay.
So that's why they were priced at a premium multiple. And the way, um, and then I kind of asked myself, or you kind of ask, what do the companies value more in
Mhm.
the sector? And it was the ones that had proprietary data and the ones that had faster organic growth. So organic growth was the one that would make your multiple higher. So, um, does that make sense? So
Yeah.
it's like you want to look what's valuable in the industry, and what, I mean, it's kind of backwards, but like you want to figure out what the right multiple is. You want to figure out how companies within the industries think about multiples. If that makes sense.
Yeah. Yeah. Yeah.
So a growth company will naturally be very priced on growth. Um, and so like a value company, and if we're thinking like value, like a cyclical value, like a resource company or a staffing company, even like retail maybe.
Mm-hmm.
Um, those things, because they're cyclical, they might go up and down. So then you have cycle peak multiples, you have cycle trough multiples. So that's one way to think about it. So like a staffing company like Robert Half, you'd want to look at what's its peak multiple when the economy is doing good and what's its, down multiple, and
Mm-hmm.
ideally you kind of buy the bottom and sell the top. So that's
Mm-hmm.
another way to look at it.
And
Um,
no, I think I'm clear. Where does the valuation fit into your framework? I mean, does it come the last, or is it you start with it? How do you, when you have to give decisions to buy a particular stock, is it what's the kind of a where does it fit?
yeah, it comes at the end. I
Okay.
mean, I guess like the past, I think until this year, like the past 7 years, multiples went up for everything. So,
Yeah.
so it really just did not matter. Um, and so it really was just which company was a better company. Um, but I think now, like now multiples have come down. I think, everyone, including myself, realizes, okay, there is like a limit to valuations. And so it still comes in at the end, but I don't like I don't it's not like a reason to do anything. Like it's not a reason to buy or sell anything usually, but it is something to keep in mind for the long
Okay.
run, I think. So I
So
usually, yeah.
are you looking at any particular company right now for yourself which you are investing in or which you're bullish about, which you really like?
Yeah, yeah. I mean, I'm looking at I was catching up on, so I have a couple of like, so I like C, even though
Okay.
there's like having some issues right now.
Uh-huh.
I like Upstart,
Okay.
even though they're kind of expensive.
Yeah. Yeah.
I like Playboy. It's like a very small cap stock, but I think it's a good story.
Uh-huh.
And I'm trying to figure out what's going on with Lightspeed, to be honest. But that is something
Okay.
that I'm kind of curious about. Those are kind of the
Oh.
big ones, and I have a couple other small ones, but those ones I follow a little bit more closely.
You want to talk about one of these? C Limited. What did you think about the company's prospects? What do you think about the valuations and all the stuff? I think the stock was like what 260, 50, whatever, and now it's like 130, whatever. I mean, I'm a C
Yeah,
holder. I'm in Singapore, and
yeah,
Shopee and all.
yeah,
My wife just ordered something from Shopee. So how are you looking at this company? And just
yeah, yeah,
walk
yeah.
through your thought process on C.
Okay, yeah. So walk us through my thought process. And I would love like if there's something I'm missing, then you might
Yeah,
have better information than me.
yeah.
But I'll
I'll,
walk you
I'll
through how
tell
I'm
you.
thinking
Yeah,
about it.
yeah, yeah.
Yeah. So I mean, like the way I'm walking through it is okay. So there's three businesses, right? So there's the Shopee business, and so I'm looking at that as okay, it's like 10% e-commerce penetration in Southeast Asia. I think it can go to 50%, like China. Basically, you think, I mean, Southeast Asia is the same size as China. Shopee seems to be the leading thing, and I'm kind of assuming that it has something special that will keep it as a leader, just like Pinduoduo or Alibaba in China. And I'm kind of also basing that, from an experience of looking at Amazon, that there's network effects from a marketplace. So I'm assuming that's going to grow to be the leader in those markets. And I'm also assuming that they can leverage it just like Amazon does to eventually get earnings. And the second one, Garena. So that one I'm not, I kind of looked at some data in terms of like that fire or free fire game.
Yeah,
And like
yeah,
it's clearly doing really well, but it's really slowing down
yeah.
this past quarter. So, I thought that would have like maybe 1 or 2 years left. Like I realized when I was looking at it, it's like this might be a one hit kind of thing, but I figured they could keep growing. But it looks like now they got to find some new gaming titles.
Mm-hmm.
Um, I don't like I don't honestly have that much insight into the gaming franchise other than like they're investing a lot into it. And then C Money, like same thing. I'm kind of assuming that um, they'll reach a certain level of adoption of C Money for the Shopee franchise or the Shopee business. And so I kind of value that like a Alipay for Alibaba. So that's kind of how that's like my high level thesis on it. It's like valuing those three companies and just putting them together.
So have you run any valuation model on that to kind of come at a certain value, or or you kind of
Yeah, I'm still working on it. I don't have anything like that great yet. Still kind of working on it.
yeah. But what
Yeah,
do
just
you
because it's
what
kind of tricky.
tricky in what sense?
Tricky because so the tricky thing is how's this gaming company going to do? Because when
Okay,
I was first looking, I was thinking this could grow like 10, 20% a
exponentially.
year, right?
Yeah,
But
yeah,
it's like going to shrink next year. So what's the growth rate of that? Shopee, I think is like it seems like it's got a lot of runway, right? Because its
yeah,
penetration is low. So I mean, that's like what was it, like 50, 60% kind of growth. I think maybe
yeah,
it'll taper down.
yeah.
And then out, this payment thing, I think the adoption should keep coming up. Um,
But your thesis is still bullish on the company?
yeah, I think still bullish on the company. Um, yeah, still bullish on the company. I'm not aware of it. Like I'm not aware of any flaws. Like I'm not super close to it, so I am curious if there are flaws that are apparent. But so far yeah, so far I'm still bullish on the company. Yeah. It might
Yeah,
take like a year or two though.
yeah. So I think the key concern right now, obviously, when the earnings tank was Garena,
Yeah.
Garena kind of slowing down, and that's where I think a lot of repricing of the stock is happening at the moment. But you're
Hmm.
right. I think Shopee has grown tremendously, and Shopee is beating Lazada in this part of the world. Lazada is their closest competitor, so I think they still hope for the company. And a couple of more questions is,
Sure.
I sometimes think Tesla, for example, let's say. I mean, obviously, I'm
Yeah.
a big fan of Elon myself. I don't know about you,
I love
but
Tesla. Oh, yeah, I
yeah,
love
yeah,
Elon Musk.
yeah, yeah. Why is there so many cells in Tesla? And it's one of the most successful company stocks. Why did Wall Street got it wrong? What's your? I mean, you may not have an answer on this, but what's your idea?
I don't exactly know. I mean, I remember everyone made fun of it because the valuation was so high.
Hmm.
That was one thing. That's why, yeah, I think I'm trying to remember, I guess like the kind of like the zeitgeist at the time was everyone was like this company has no earnings.
Hmm.
Like it's financially just doesn't have enough capital. I think
Hmm.
that was kind of the assumption from like a financial point of view. But I think what a lot of people miss, and I think what like Kathy Wood saw very
Hmm.
clearly was there's going to be an acceleration in growth or an acceleration in car sales. So yeah, I wonder. I think a lot of people just didn't drive a Tesla or just didn't like didn't see
Hmm.
like how people liked it so much and how fast it was growing. Like they were very focused on the financials and they were like, this looks terrible financially.
Hmm.
I think that was probably it. I could be wrong, but that was my sense
And
because it was like non-GAAP earnings. Yeah.
yeah, but I think the other stocks like other companies like Netflix or Amazon, these been the highest returns they've generated for the investors. But I think for
Yeah.
long they did not win respect from Wall Street. I don't know. Again, is the earning thing, or is it the non-traditional companies? Was it lack of understanding?
I think it was a lack of understanding. I think it was a lack of I think it I think it's like a lack of it's like a lot of the if you're going just based off sell side recommendations, right? Like just unfortunately because so much of the sell side is like it's partially because like asset managers have shrunk in assets. So most of the fees are with the hedge funds and like hedge funds are trading each year and they're doing this long short stuff. So much of the sell side is focused on like okay, what's going to happen this next coming year? What's going to change the stock for the next year? So the recommendation when there's everyone's so trained to do that. So when everyone comes around being like, what's your top pick? People are just going to be like, okay, so this company has a catalyst company and they have like some event that's going to happen this year. This is why I think it's a top stock. Unfortunately, like no one's really thinking like what's going to be the biggest company in the next 10 years. So
Mm.
that's why, right? Because otherwise the sell side would just be like Google and
Mm.
Amazon, Facebook, like they wouldn't have
Yeah.
jobs.
But what's the dark side? I mean, you've left that world. I'm not sure whether you're going to go back to that or no. But what's the dark side of being a Wall Street analyst? And there are business pressures everywhere, right? I mean, what do you remember as something not too good about that, which can be misleading? What's your
You mean
thoughts
like in
on
terms of Wall Street?
in terms of Wall Street analysts, and their recommendations? Because I don't see any sell recommendations. You see, I see very few sell recommendations. I see mostly buy.
Oh yeah. Yeah,
No,
there's no
no,
sell
yeah.
recommendations.
And why is that so? Because not all companies one should buy, right?
Yeah, because it's like as a sell side analyst, you manage a relationship with the company.
Mm-hmm.
Um, and usually the bank that you work for is doing banking business. And banking business usually means you're selling stock and you're selling
Mm-hmm.
IPOs. You're usually not like it's sort of a big deal if the analyst tells. Sometimes it happens. It just looks weird, right? Like if the JP Morgan analyst tells tells everyone to sell Facebook while bankers are selling Facebook stock.
Mm-hmm.
Like it's just the way the business is structured. Um, so if a company is rated sell, it's usually really bad. So that's just
Okay.
sort of one tip. But I think generally like the what a lot of analysts would do is they'll take it to like market perform or like a neutral
Yeah.
as like I don't think that this stock's going to keep going up. Like no one's really forced to. I mean, like like people are generally incentivized to be positive on the stocks because you don't like you're kind of you're developing a relationship with a company and you usually want the company to do well, and the company kind
Mm.
of likes talking with you and giving their strategies and how they're going to do well. Um, so yeah, that's why there's no sells. If that makes sense. But
Yeah.
generally, yeah, that's why it leans a little bit more bullish.
And then do a lot of analysts invest their money, or they're not allowed to invest?
No, not allowed. It's kind of unfortunate, but yeah, you can't buy or sell the stocks that you cover. You can buy and sell stocks outside your coverage universe. It's supposed to make people objective, but it's kind of unfortunate.
Yeah, because I think once you have skin in the game, you think differently, don't you?
Yeah, yeah, I would think so. I don't think that there would be anything wrong if analysts could buy and sell stock. Like I think the reason why there's regulations, at least in the US, that like the analysts can't buy or sell stocks because I think back in the day, like they used to have more information than everyone else.
What are the lessons which individual investors can learn from Wall Street analysts? What can they adopt?
Yeah, so I think that's like an important thing. So I mean, we kind of talked about like that disconnect between
Yeah.
Wall Street and individual investors. I think that like individual investors will can do a lot better like if they don't just ignore like like some of the things that we talked about, right? Like what moves earnings, how do you price a stock based off its multiple, why events sort of move stocks. I think those things will be helpful. I think those are important for individual investors for picking stocks so you don't just get swayed by a price target or some recommendation or just like someone very bullish, because I mean there's like so much like crazy stock promoting outside of Wall Street. Like Wall Street is at least it's like they have to have a like a financial
Mm.
model and like have a real
Mm.
reason. But like if you look on the internet, it's like there's a crazy stuff. People are just pumping stocks, like literally pumping stocks. Um, so I think the lesson is like kind of those practices of Wall Street, like kind of like what we talked about, I think those are like those can really, really help people invest well.
Yeah.
Or at
Yeah,
least like not lose money as much.
but how do we kind of separate out the good analysts versus the bad analysts? Who should we follow?
Yeah, it's tricky because like when you're using analysts as an investor, like you're talking to them. You can hear how they think, and when they pitch an idea. When with the report, if they write up the idea, then you can kind of see how they think. Yeah, it's tricky. I would lean towards, yeah. So okay, so the best way, every sector has an analyst that is the top analyst.
Okay.
Usually the one that knows the most and follows the companies the most. Usually maybe it's from like they've just covered it from a very long time and they're at a big bank. That's sometimes pretty solid. Sometimes when you look on, earnings calls, the one that gets the first question every time
Okay.
usually is like the company thinks that they're the most important. So that's usually someone to watch. Not maybe just being really good like calls, but like at least this person would, their view would be paid attention to. Yeah,
I think that's enough.
yeah,
I mean, there is a lot of subjectivity involved in this, and
it is. Yeah,
yeah, yeah. Uh,
yeah, yeah. I mean, I
oh,
guess the last thing is like, you know, my goal is to give individual investors the insider view of Wall Street. And
mm,
I think insider view is going to make people better investors or help you make better investment decisions and kind of eliminate that disconnect between Wall Street and individual investors.
awesome. I think that's really needed, if you ask me. And
Yeah.
for that to happen, the inside working and how it functions, how do you research, all that is, what are the gray areas or what are the white areas or what are the black area, whatever, you got to have a understanding of all that. And that's where I think this interview is going to be very useful.